May I now request Ashish Bhai to give his address? Thank you.
Respected Chairman SEBI, Shri UK Sinha, President ICSI, Shri Sridharan, Vice President Shri Vikas Khare, my friend and guide and Secretary ICSI, Shri Sahu, Shri Atul Mehta, friends, ladies and gentlemen, thank you very much for coming here today morning. I'm thankful to ICSI for bringing this Capital Markets Week to BSE, and this has been happening for last 3 years, and I'm really thankful that ICSI as a premier education institution is actually thinking about the capital markets and how to train people, how to make people aware of the nitty-gritties of capital markets. Today's topic is engine for growth. And one thing I was always worried about is, what is growth? Why do we need growth? Because we think growth is a sort of self-justifying activity. It need not be. So why growth is necessary for a society, and why a growth is necessary specifically for India? Because in India's case, it is important that India is actually at the bottom 1/3 of the countries in terms of the GDP per capita. And growth is a very, very important aspect. But what are the components of growth? What are the issues that affect the growth? We measure growth ourselves. Is only the material well-being, the wealth of a country or a wealth of a person or an individual or a citizen in a society is about growth? Is it not about anything else? Is it not about the health of the people? It is not about the wealth distribution of people? Why we worry about growth so much, and why growth has become literally, if you look at India's political situation over last 20 years, Indian political discourse has become what I call a macroeconomics course in economics. It's nothing, or growth, it's nothing to do with rest of the economy, rest of the society. It's basically about growth, growth, growth. And why growth is so much more important? Because today, India needs to create so many jobs. Every year, India needs to create 1.5 crore jobs for next 20 years. 30 crore new jobs in next 20 years, and it cannot come. And if we do not have that growth, if we do not have that jobs, we will have serious social repercussions, and that's where the growth is extremely important from Indian perspective. If we have growth, we will also be able to create health, redistribution, equal opportunities, and so on and so forth. If we do not have growth, it's going to be very difficult to actually achieve this. Now going forward, what is the growth components that we need to worry about? What are the larger issues that we need to worry about? India needs to invest in infrastructure, because jobs will not come without infrastructure investments. India needs to invest in skilling of people. I can see a lot of young faces here. Skilling is one of the largest issues India is facing today, because the people who we are actually producing coming out of job markets, coming out of educational institutions, probably are not equipped to take up a vocation. How do we create a vocational based framework? We also need to invest in newer technologies. We can run our lives, we can run our societies, we can make our policies based on what I call rear view mirror. What has happened in the past, I can make our policies saying manufacturing is very important, because manufacturing was important in Europe in 19th century. They grew because of manufacturing. So we will require to have a manufacturing framework. We don't have to. Probably we will have to. But idea is, nothing is a given answer in a ever-changing world. Europe went from agrarian economy to manufacturing to services. We went straight from agrarian to services. Today, out of broad GDP frameworks, out of 100%, 70% is services. Around 15% is manufacturing and 15% is agriculture. We just moved without our knowledge. Although economists kept on saying, because all our economists are actually taught either in US or UK, or all of us read those books only. So we think that is the way to go in life. It doesn't have to be. Technology is changing so rapidly that we will have to rethink our strategies, and looking at the past is a good idea. Learning from the past is a good idea, but that is not the only thing. Manufacturing, we must improve. We have given a lot of space to China. 2017 onwards, China is going to have less and less number of workmen coming into the job market because of their one-child policy. India has a great chance to recapture manufacturing. How do we create our policies to recapture that manufacturing is a very important aspect in the policymaker's mind. But on top of that, for me still, because of automation and all, you don't require too many workers. How do we gainfully employ youngsters coming into the job market over the next 20, 30, 50 years? India is going to remain young for a very, very long period. And for that, last 20 years, we have depended only on one single growth engine, as I call IT. Information technology has saved India in last 20 years. But it's now losing the force. We need more growth engines. And fortunately, there are more and more growth engines coming up in life. 3D printing, robotics, nano particles, genetics, wearable computers, body parts manufacturing. So many newer areas are coming up and they will be larger than IT has ever been. Because they are going to change our lives fundamentally in next 10, 15 years. So idea is, how do we train our youngsters into those things which are coming up? If you have seen in last 15 years, even today, the largest market cap having companies were not even existing 10 years back. A Google, a Facebook, a WhatsApp. They didn't require huge capital. They required an exposure. They required a market. They required young people with enthusiasm and knowledge and information and wisdom. And that is what US provided. How do we provide as a society that ability for all of you to think, create newer things which society can work on? And that is where all of us currently are focusing on, in addition to getting infrastructure done. Infrastructure is very pathetic in India. How do we invest in that? Over next 5 years alone, we need to invest $1 trillion in infrastructure. Where do we get money from? In next 5 years alone, we'll have to invest $500 billion in manufacturing, in plants for power, in solar energy and so on and so forth. How do we get that money? $1.5 trillion in 5 years. How do we get that money? It's very simple. India is now a country of $2 trillion GDP. The numbers would look very large if you ask for $1.5 trillion, but India is a country of $2 trillion GDP with 30% savings rate. Every year, we save $600 billion. In 5 years, how much will we save? $3 trillion? If we are able to invest ourselves $1.5 trillion, we would be able to satisfy all our investment needs, but we don't do that. Only 10% or less of the savings come into formal finance. The only way the modern economies create jobs is by having the companies come up with newer ideas, putting plants, putting services companies and so on and so forth. And for that, the markets, the stock markets have a huge role to play. In BSE was set up 1875. It's now entered 140th year. In 140 years, it has helped India create $1.5 trillion of wealth, 90 lakh crore of wealth. If we do it well as a society, in next 20 years, we will be doing 10 times more. From $1.5 trillion market cap, we are going to go to $15 trillion market cap. From the number of investors of 2.5 crores, 2.57 crores, will go to 25 crore new investors in next 20 years. And that is the promise the exchanges have, that is the promise the markets have. And that brings me to the topic of why markets. Why stock markets? I mean, there is a socialist system and then there is a capitalist system. That's what we are taught, right? But surprisingly, markets are in both places. Markets allow you efficient management of resources. They allow you to transfer goods and services against somebody else's work and money and so on and so forth. And it has nothing to do with stock markets as a function. But markets as a concept, there are markets for goods, there are markets for potatoes, and there are markets for real estates, there are markets for carbon credits and so on and so forth. There are markets for labor. Similarly, there is a market for capital. And this is the place where the capital changes hands from the savers to the people who need it, which is companies. And in modern economy, the only people who create large number of jobs are companies. Why stock markets are so much more important is because stock markets allow fair, efficient, transparent and orderly way of functioning, sharing information, taking care of what I call minority rights. There are owner managers and then there are minority shareholders. Owner managers have a lot of information, lot of ability to take decisions. Minority shareholders, you and me invest in as small shareholders in companies. We do not have any rights. We don't even have information as much as the company managers have. And that is where the exchange as a mechanism acts as a framework which forces the owner managers or even managers where owners are not identifiable to declare the information so that asymmetry of information that is existing between the company managers and the other investors, that is reduced. In last 7 to 8 months from November 2013 onward, SEBI has insisted on BSE that we need to ask companies even the most detailed questions even if they disclose their information. In last 7 to 8 months, 263 instances of more than 160 companies where we have asked the companies saying, please give us more information. Please give us more justification for the sake of the investors, the minority investors who need to get more and more information about why you are taking any decision. And that is basically for me the power of capital markets. The other issue that comes up in mind is, if stock markets are so important, they are capital markets, they allow equities to be raised, debt to be raised, hybrid, that is convertible debentures and all to be raised. Why is it that the banking system in India is so much more important? Why stock markets we are still looking at with suspicion? Because stock markets move a lot and they move a lot in a visible way. They move a lot every second, every microsecond. Bank deposits or banks, somebody defaults on bank, we don't even come to know for a long time. So it is basically non-transparent framework in banking system that makes us feel that there is a huge risk because it moves, the price, asset prices move, and that's why stock markets are more risky. They are not. It's just that in banking, there is also a little bit of a government intervention where a bank fails, somehow it is made to merge with another bank instead of allowing it to fail. Whereas what you get on stock markets is basically really mark to market. So for me, there are intermediation processes like banking, and then there are disintermediation processes like stock markets. Both are very, very important for any economy. It's not only banking is important, it's not only stock markets are important. Together, they complete a framework which is absolutely essential for a modern economy. Many people ask me that if you are saying that the role of stock markets, the capital markets, is to channelize savings from the savers into the companies, why is it that the Indian stock markets are only trading derivatives? We are not raising funds over last 10-15 years as much as we should have. We have, in some sense, lagged behind because we have become too fast. We have gone for high frequency trading. We have gone for derivatives. They are important in a particular way, but our focus has to be on raising capital, allowing jobs to be created in India, without which the function which the society has allowed us to function may not be performed, and then society may pass us by. Idea is, how do we recreate, how do we rethink our own relevance to the society, and that is basically in helping India create jobs. India's job for next 20 years is to create jobs. With that, I thank all of you for coming here today morning. I hope today's discussions will give you a food for thought in terms of assessing the role of capital markets as engines for growth. Thank you very much.